A flurry of retail activity occurs in the last 45 days of the year. We've got Black Friday, Cyber Monday, and now Christmas sales to look forward to. And we've got an 8 out of 10 ranking stock that could help you power into profitability in Q4. And that's Stanley Black Decker. And our proprietary sentiment indicator Trackstar shows that search volume has picked up in some interesting retail-related categories. Investors are looking at Christmas presents for dad, and more specifically, financial pros are looking at stocks that are close to home. Stanley Black Decker shares peaked in mid-2021 and are down more than 64%. And that's a massive drop for a steady Eddie company. But is Santa ready to drop some power drills down the chimney and turn things around for this stock? Stanley Black Decker has provided tools, storage and engineering solutions for professional, industrial, construction and consumer use since 1843. And this year has been a challenging one for the firm, dealing with commodity inflation, higher supply chain costs and inventory management. Stanley Black Decker has implemented a series of initiatives resizing the organization and reducing inventory. The company has managed to consistently boost revenues year after year and is famed for its dividend, but it doesn't have a lot of cash in hand, and its interest expenses were $270 million in the last year. The real problem has been operating cash flow. Stanley Black Decker lost $1.7 billion in operating cash flow over the last year, but management is keenly aware and focused on turning things around. Currently, the firm has a significantly better PE gap ratio compared to its rivals, while its price to sales ratio is mid-range, but its gross profit margin is much weaker than many of its peers. Additionally, Stanley Black Decker grew its revenues by 21.4% year over year, which is mid-range amongst its peers. Overall, the company has had many challenges this year, but the company has worked through several difficult times in its 179 years of business. Management has already set forth initiatives to improve its profitability. We believe that long-term, this is a buy, and with shares trading down 64% year to date, this is time to get in. But keep in mind, Stanley Black Decker may take several years to bounce back.